Hey everybody, this is Jim at SP500chart.com. It is Sunday afternoon, November 22nd, 2015, and we're going to take a look and see what happened in the S&P 500 this past week. We got a short week coming up because of Thanksgiving, but the chart is the chart, so we're going to see what's been working. Before we do, I need to remind you as always that the website and this video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts, and this is just for educational purposes to see if these old charting techniques if they still work in the modern markets. So anyway, let's get started and take a look. We're starting out with a 2-hour look on the S&P here. What does that mean? Well, that means that each single one of these vertical elements represents 2 hours of trading. Sometimes people will say, look at a daily chart, and you might say, well, does that mean it's a chart like this that just shows what happened during the day? Or is it a daily chart where each candle is a day? When I use the term, I'm referring to the candles. So if we're looking at a 2-hour chart, that's not 2 hours from right to left on this chart, but each candle is 2 hours. We're actually looking at about 6 months of trading here. And what I want to show you is just to something that we started talking about before we had this bounce that happened this past week, and that is the possibility that we could be looking at this line right here as the neckline of an inverted head and shoulders pattern. Now, that's not a guarantee by any stretch. It isn't a guarantee until we break out with gusto, if you will, over this neckline right here. Okay? But the fact that we've come down and found some support and started back up, I think that bodes fairly well. Let's put it this way, I see nothing in this chart right now that says this is not an inverted head and shoulders continuation pattern. Not yet. If you want to play bear, well, there's a possibility that this could be a really big head and shoulders top. That is, if we don't take out this neckline. If we take out this neckline, then I think we head up for something close to 2400. But if we don't take out that neckline and instead we fall back down and take this line out, then it's a totally different picture. Okay? So how do we know when it's happened? Well, you break out over this line and you confirm it with a move of at least 1%. And frankly, since we're talking about a pretty significant upward move here to just under 2400, I would say a closing level in the S&P in excess of 1% above this line, and that would probably also put us at a new all-time high in the S&P. Okay, so now that we sort of have the broad context, and again, the bearish possibility is left shoulder, head, right shoulder, break down through this line, and we end up probably around the low 1600s. Okay, the bullish is we traveled around for a while. We stayed in between this resistance line and this support line. We just bounced off of that, and now we what appeared to be a moment of extreme weakness, or about a month and a half actually. Now that we've reversed and gotten over this whole range that was present during the middle of August and all the way through September and half of October, then it looks like we're ready to challenge some of those highs. So if this is an inverted head and shoulders pattern, what would it look like? Well, like I said, the left shoulder was complex. It had a lot of dips on it. The head also fairly long, lasting more than 2 months. then we are in the process now, hypothetically, of forming the right shoulder. So that's the big picture. Now remember, we had this double dip down here. This line is the level of the peak that was in between the double dip. And according to John McGee and Edwards and McGee's technical analysis of stock trends, a double bottom or a double top, but in this case a double bottom, is confirmed when you get over the level that was in place prior to the forming of that second dip. We got over that, we back tested it once, back tested it twice, and now the question is, do we continue on up and take this out? Because of the double bottom, and again, I know this really isn't a double bottom because of where it is in the chart, but if it acts like a double bottom, and so far it has, then we have a target of 2188 based upon the depth of these two dips. So if that 2188 gets met, then obviously we have to be over the neckline for this potential inverted head and shoulders pattern. So that's what lends, I think, a little bit of intrigue to what we're looking at right now in the S&P. So that's the big picture. Now let's zoom in and take a look at what happened this week. Well, the week started on the 16th, and we knew that we had been in a downward trend. You remember we had this, we broke our narrow rising channel, formed a bear flag. We called the bear flag. Obviously, we didn't say it was a bear flag until it broke down, but that broke down on the 12th. Then we continued down Thursday and Friday. Interesting to note, too, we were in this broadening pattern here, like a megaphone that's pointed down. Here's the resistance line, here's the support line. And we threw this trend line up on the chart, too, with the idea that since we had so many touches on this line, that once we got over this, we would likely come back and challenge the resistance line in that descending broadening pattern. And we did exactly that. Then we formed a little bull flag. And I remember on the 17th, I was saying, guys, this is a bull flag if we get up over this line right here. And if we do, I suspect that we will put more pressure on this resistance line and we will break out over it. And that's what happened. The interesting thing this week is that we had so many almost perfect touches on trend lines that have been on this chart before we ever got to this point. That is just amazing to me. And don't get me wrong, I'm not saying that makes this chart infallible. I'm not saying it makes me a better technical analyst. I'm not saying that. All I'm saying is I love it when that happens. And we talked about a number of these things throughout the week. Remember, we got up over, we came down exactly to that extended line from our midpoint in that double bottom. Then we rallied up exactly to that descending resistance line in the broadening pattern, formed the flag, came back up to this line, broke through it. Then we got back over our extended neckline from that head and shoulders top that I showed you a while back. This right here. Head and shoulders, left shoulder, head, right shoulder. Extend that on out. And I want you to see that we got over that. And when we got over that, we stayed over it. Formed another little flag, broke out over that on Friday. And if you zoom in even closer, you can see that when we broke out over this little flag resistance line, we came back for a perfect back test of that line, and then we started to bounce. Now, if we look at everything that took place on Friday, you could make the case that we formed yet another bull flag. But, as is always the case, it's not a bull flag until you really break out over that thing. And since this is a small bull flag, then I would say I I would say any move that surpasses about 2092 should be considered a breakout from this pattern, and it looks like we will come up to this upper line here, this purple line, which is, if you'll remember, the neckline to our potential inverted head and shoulders pattern. Now, just a quick word. Because we had a lot of activity over here on this left shoulder, and we had a double dip down here on this, what I'm going to call potential inverted head of this pattern, it would not surprise me if we do a little juking and jiving over here on the right side too. If this is going to be anything like a symmetrical pattern, then we could stay under this neckline for a number of weeks before we break out. But the same rules apply whether it happens tomorrow or whether it happens a month from now or whether it happens 2 months from now. As long as we do not set a new low, lower than this double bottom down here, and as long as we eventually get up over this line of resistance right here, then that would confirm an inverted head and shoulders continuation pattern. So guys, I think it was a super week. So many little things worked out beautifully. So I'm excited to see what happens this week. Again, I'll remind you, it's a short week. A lot of times short weeks will go counter to the trend because people who are in the markets right now expecting a bullish move out of the S&P, when they're faced with a shortened week, sometimes people get a little bit antsy and they have a tendency to want to park some cash. So it would not surprise me if this week we have at some point some weakness. So that's where we are. I don't think I can really add much more to that because the week itself was so strong and the chart worked so well. So all I can do at this point is say, hey, here it is. It's been working. We know what the big picture is. I'll remind you, there's a bullish picture and there's a potential bearish picture. That's why we keep watching it, and I think that's why it's important to play out different scenarios in your mind because you can't get locked into one thing too strongly. We saw what happened years ago in 2010, 2011, when bears would not let go of their bear idea, and people were just getting crushed with their short positions because this market just kept going up. And guys, we're in a bull market. I don't know when it's going to end, but I know that we have potential in this chart for significant gains going ahead. So guys, I just want to take this opportunity. Thank you for watching. If you are not a subscriber to SP500chart.com, I want to encourage you to do that. If you had done that, you would have followed each and every one of these little moves along the way this week. And because you non-subscribers, because you will not be hearing from me until next weekend, I want to take this opportunity to wish you a happy Thanksgiving. And I hope you get to spend some time with family. And remember, this is about money. But really the most important thing in your life are things money can't buy. So there you have it. There's your weekly review for the week ending November 20th, 2015. Thanks for watching, and thank you for your support. Take care.